The global investment research market has lost over 7,500 years of experience since MiFID II came into effect in January 2018. That's a big number, with serious implications for the buy-side's investment processes. At Substantive Research, we think understanding the implications of trends like this lets us help the buy-side perform better. And this March, we published findings of our latest study analysing the juniorisation of analyst research, a term we'd heard our clients talking about over the last few years, but one we thought really needed quantifying. We had read all the headlines showing providers pulling back in various areas, heard about the anecdotal moves, but the data showed us we hadn't appreciated the true momentum of change. As you can see here, it's global. Both Europe and the US have experienced this brain drain. One thing to note is that Europe's loss of 3,074 years is proportionally much higher than the US's loss of 4,606, a factor which many have attributed to the deflationary shock to research pricing we've seen from MiFID II. To provide this insight, we've used multiple datasets, our own tech cleaning automations, and importantly, old-fashioned comprehensive fact-checking to get to a place we could be confident about the numbers. Here we cover leading banks and brokers that make up at least 60% of the average research budget. The picture varies again if you split it into full-service banks and the more research-focused premium brokers. The banks represent more of the market, but even taking this into account, you can see that premium brokers, in comparison, have hung on to their senior analysts, especially in Europe. But the key takeaway for us from all of this data is that when you look individually, broker by broker, the picture varies dramatically. Some firms have used MiFID II and COVID-19's structural shocks as an opportunity to gain market share, which is paying dividends for them already. It's only by capturing changes in experience levels plus the staff numbers coming in and out of each sector that you can understand where research providers are investing in their teams. It's a truism that portfolio managers know what research they need to perform, but with a fragmenting market hit by regulation and now rapidly adapting to ESG and alt data demand, no PM can keep on top of the structural changes we now see unfolding. At Substantive Research, we map the research market every way we can. And if you are a buy-side firm interested in swapping notes on this data or any other trends that matter to you, do send a note to info@substantiveresearch.com or DM us on LinkedIn or Twitter.